The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to have Stan Harley as our guest at the break. Always an interesting view on the market. And also what we want to be doing is, hold on one second, we've got to get these other charts up so you folks can take a look at them. I'm trying to bring up the DAX chart. I put up the chart of the FTSE, but that's only a 15-minute chart. And let's get up get the FTSE up here. We'll be able to see here. This is the DAX chart. Oh, I don't think that posted. Just a second here. Folks, only once in a great while do I oversleep, and today was that day. I was up quite a bit last night. But anyway, you can see the large ABCD there and the DAX. We're making a little retracement now, heading down a little bit, so we'll see whether that's going to keep on going. And there's one here that is really, really interesting here. That's the next one that I'm going to post here because it's a very, very long-term chart. And the whole world happens to be bullish this right now. So let's take a quick look at this. This is the Nikkei 225 going back to 2011. You can see it's completing a perfect ABCD up there at 27,600. And also you can see it's making another ABCD pattern from 2015, also at 27,600. Now, folks, the Nikkei Dow has a high of 39,000 and change made on December the 31st of 1989. I happen to remember that because I was involved at that top. It was making a big expansion, and I believe that was one of the trades of the year that I did that year, as I recall. In fact, I'm almost 100% sure of it. The reason why that number, 39,000, is so important is because CNBC had a special on the at the Emperor's Castle, at the Emperor's home there in China. And if you'll remember, the Japanese stock market was the most expensive in the world at 39,000, and the person at CNBC did a very, very interesting experiment. He had $1,000 bill, U.S. $1,000 bill with the picture of Cleveland on it, and he laid that $1,000 bill on the ground right in front of the emperor's home, and he said, this is how much real estate you can buy in Japan for $1,000. $1,000 bill is about 4.5 by 2.5, and it was it was really quite amazing. The reason why it was so funny is because I had bought $1,000 bills for my kids and also $500 bills for the kids when I was in Chicago. Byron Tucker was dating one of the girls at the Federal Reserve there in Chicago, and she had access to cash that came in, and they didn't actually destroy it. If a person requested a $1,000 bill at that time or a 500, you just had to transfer $500 of regular money, and you got a $500 bill. Well, these are antiques, so we got McKinley, which was on a $500 bill, and the Cleveland, which on a $1,000 bill, and still the girls still have those. So they're at a premium now. But anyway, that's how we remembered it. And from there, we went from 39,000 all the way down to 7,000, I believe was the low, sometime in the late late 90s or something like that. I'll remember. Well, what am I talking about, Bozo? Look at there it is. There's the low right there. The low's there at 7,900. Then 2011, that was the low of the market, from 39,000 down to 7,900, and now we're back to 28,000. Guess what that is, folks? That's a 78% retracement on the long-term monthly chart. Whether this is a top or not, I'm not sure, but it's a double ABCD pattern, so we need to pay close attention to it. I don't trade this one. I never have, other than going back years ago. And we didn't have Nikkei futures. We had to do it through through a Switzerland. I don't remember. I think it was a Switzerland count as I remember. But anyway, that's what was happening at that time. It was hold on just a second. How much is $1,000 bill worth? Depending upon condition, if it's in good condition, they run about $3,000 up to more. And then the $500 bill runs at about $2,000, and so that's those are the things, because they are collector's item. And if you have one in really good shape, they're worth probably a little bit more. And that's pretty much the way it looks like. Anyway, let's move on to a couple other things here that we need to cover this morning before we get to our good friend Stan Harley. Let's talk a little bit about the crude oil market, folks, and especially, I mentioned that those two trades yesterday, the Nasdaq, and then also the heating oil and the crude oil markets. Let me bring up that crude oil market, because it's very, very important here. Hold on, where is that darn thing? Here. Okay, here it is right here. We'll start with the heating oil, and then I'm going to do crude next. But here's heating oil. You'll notice that the 61% of the high from the 0.3, this is a 135 pattern. That's lower tops, okay? That's different than a 3 drive to a top pattern. If you look on the left there, where you see those two red lines up there completing the triangles, that's 3 drives to a top. Each one of those is a 3 drive to a top. They're very symmetrical. Just like this one, the time frame between 1 and 3 is equal to the time frame 3 and 5. We're exactly at a 61% retracement at 152 and change. And where did it go? It went to 153. And now we're trading quite a bit lower than that. We had a 38% retracement in that last night. We sent that out on the video. So we added another unit there. And now we have our stop, lowered a bit. So that's what we're watching in the crude oil. Now let's take a look. That's heating oil, boys and girls. Give me a second here. I'm still recovering from the old, let's get this up here. Now, if we look at here, this was as of Friday's charts. I haven't updated this yet because I don't update my weeklies until later. The weekly high yesterday, you'll see, came within 30 points of the exact 61% retracement of the high that we made in September of 2018. So these are completed patterns. And to me, that means that if they're right, they're not going to rally any more than 30% from any of those numbers. And that's exactly what we did. For the 24/7 folks, I sent out that thing last night to say, look, we're right at that 38% level. So if this is what we did in gold, this is what we should do in crude oil. And, they don't always work, but sometimes they do. Now, let's take a look at crude oil on a little bit shorter time frame, because we'll take a look at this here. You'll be able to see it here. This is a 4-hour chart, so you get to see several months in here easy. You can see the 3 drive to a top pattern that's built in here right up at the last little ABCD pattern that looks like a thunderbolt. There's the high there at we made a higher high than we made in December by 5 ticks. And then we immediately broke. We broke well over $2, and we rallied up to the 382, and I believe we're heading lower. That's my 10 cents.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back. I wanted to bring to your attention one chart that is rather interesting, and that is the platinum chart, folks. I don't trade platinum very often, but it's in a situation where it could have one heck of a move. Most of you that follow the 24/7 service, we've been quite bullish on platinum. As you can see here, on the December the 14th, we had that, the 21st, we had that pullback, very, very fast pullback. It happened in a period of about 5 minutes. We went from 1,035 all the way down to 930. We dropped $100 an ounce in platinum, stopped exactly at the 61% retracement, and immediately came back. That was telling you that, boy, there was a lot of support down there. And now what we did yesterday, after hitting 1140, we came down $90, another big swing down. But this time we stopped at the 382 retracement, and now we still have two very, very high targets up there. One is at 1,200, and the other one comes in at around 1,250. I think it's even closer. I think it's closer than that. Yeah, it's around 1,250. So these are big moves, and whether that's going to happen in the gold or not, I'm not sure. The old adage in the market from old Jesse Livermore was, there's nobody as bullish as a sold-out bear. And believe me, I was a bear, and we got covered all of our shorts right on the low down there at 1767, and oh my goodness, it was right at the holiday time, and I just didn't want to pull the trigger from the long side because I thought we were going to make a lower low in December, and I was flat out wrong, and that just bothers the heck out of me to this day. But we'll get in that thing eventually, and hopefully it will be at a price where we don't have to risk very much, because that's really what we're trying to look at. So we'll watch these very closely. If you have any questions, folks, it's 877-927-6648. That's the main thing that we want to be looking at here this morning. Okay, now I have some information here that may be interesting to a few folks here. Let's just get this up here to show what we're looking at here. If you remember, we've been following Apple on a shorter term time frame for quite some time for a couple of our frequent guests here at TFNN. And you'll be able to see here that this is a hourly chart going back into December. As you can see here, we had the 382 retracement up there at 136. And now you see that we've had this move coming down to the downside. What that was yesterday's charts. What we're going to be doing now is we're going to move this forward in time to show you how we try to set up to see what Apple was supposed to be doing today. And we'll get this up here so you'll be able to see it. Hold on. God willing here, and she certainly is most of the time. You'll see that we did complete the ABCD yesterday at the 126 level. That tells us that we should have some resistance in Apple up around the 382 of that high that we made back at 138. Now remember, this is an hourly chart, so you've got a lot of swings on here, but it's still very, very technically is about as perfect as you can get, and as it should be, because this is the most actively traded stock in the whole world. I mean, more people own this than anything, so who knows? Anyway, you'll see the 382 retracement comes in there at 131.5. That's up about $2.50 today. The key point of this is if you'll look at the low yesterday at 126.73. Folks, if we go below 126.73 in Apple, that is going to be a very, 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 very negative thing, because you're going to be breaking the 78% level from that low that we made back on December 21st. And you don't want to see that happen if you're bullish Apple, because that would be a sign that this market is ready to head down. Any move above the 133 level would say that you could possibly make a new high in here. So, folks, with this election stuff that's going on tonight, anything in the whole world is possible. It really is. I mean, because there's so much. I mean, I don't watch the news, but, sometimes I'll have the CNBC on just to look at the prices and stuff, or Bloomberg, but I'll have it on mute so I don't have to listen to it. My voting today. No, I did my duty back on November the 6th. So that's all I do. In fact, that's not because I don't live in Georgia, Bubba. That's the problem. And I'll tell you, it's what's embarrassing, folks? I have friends and students all over the world. I mean, I have so many countries, it's amazing. But across the pond over in Europe, between Denmark and Sweden, Europe, the UK, and none in France. I only have 2 students in France, a whole bunch of them in Italy. But it's really embarrassing when they they ask me something about the election, and why did they do this and why did they do that? I don't know, folks, but that's politics. And do you know that that's been going on for ever since our Constitution started? That's why they wrote that thing the way they did, because, is to protect each other from ourselves. And I don't know, but the rules are pretty good. I hope they don't change too many of them, because it's pretty good. So we'll see. Anyway, we'll have to wait and see what the thing is. Supposedly, someone posted a little while ago that the Democrats had a slight edge coming in today, but we'll have to wait and see what's going to happen. Hey, folks, no matter what happens here, we're going to make it through. Believe me, folks. We made it through the battle in 1776, the Revolutionary War. We made it through the Second Revolutionary War of 1812. We made it through the Confederacy. We made it, through World War I, World War II. So we are going to make it. It will be tougher for it, that's for sure, but it's going to be all right. It's all I know is, folks, I've been looking at these charts since they have good data, which is back 10 years after the Civil War, which is 1875. We started getting good charts from the New York Stock Exchange. This is when Gartley and those boys were doing their thing. And you could see the patterns then. That's basically it. And then when Andrew Lowe wrote his book, in 2001, the non-random walk down Wall Street, you can see that these things repeat over and over again, and that's all you're doing. What we're trying to do is to find out, where these little patterns are and line them up, and that's really what we're looking at. I do know that if we go below 38.70, let's write this down again. 38.69 in the E-mini S&P today, that would not be a very good sign. So keep a close eye on that. All we were able to do last night was rally up to just a tad above the 382 retracement at, I think, 3708, something like that. I think maybe 3712 was the actual number. So that was a 382 retracement. So those are just a few of the things, that we're, keeping a, really close eye on here, because we're having some really great patterns lined up here for 2021. God, I can hardly believe I'm saying that, 2021. Boy, it's really scary when you're in the 8th furlong point. Folks, I still like the same things I liked at 80. The problem is I just don't remember why. That's an old quote from Rodney Dangerfield. 877-927-6648. Stay tuned for Stan, the Man Harley.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're talking with Stan Harley, the Harley Stock Market Letter. Stan, how are you doing this year?
I am just doing awesome. Thank you.
This is what I like to hear, my friend. Staying on the green side of the grass. Stan, we have a question from one of our listeners, and that is, do you take into effect the presidential or election year cycle that, the foundation did some work on many years ago?
I know what they did, and I applaud what they've done, but I probably don't. I do a lot of work with market cycles, but it's more dynamic than static, I would say, in the terms of my form of analysis.
Okay, we have one other question, and this is from Costa Rica, and the gentleman is asking, do you use any astrology at all in your cycle analysis?
Generally not. I am mindful of certain things, but for the most part, no, I don't. I look at recurring patterns on the charts. I attempt to model them using statistical analysis, and from that, I kind of derive my expectations about where I think things are likely to head.
Okay, well, since we don't need you anymore, since we do a lot of astrology here, good luck to you.
I will share this. I have done a lot, and I mean a lot of analysis, looking at planetary aberrations and reversal points in the markets. And I know that has been your focus. And when you came out and spoke to the market analysts of Southern California many years ago, when I was president of that group, you talked about that at length. On balance, I probably have not found consistency in that, although I would say Sun-Jupiter conjunctions and oppositions tend to have probably the highest degree of correlation with intermediate turns. But like a lot of things, one needs to look for a clustering of a plethora of technical factors coming together that consistently forms market turns.
Well, I have to agree. And boy,
in my experience.
Well, your experience is pretty good because you're always up there in the ranking for the Timers Digest. And, you're talking about a, 40-year career, right? That you've been, how long have you been doing the Harley letter?
Oh, you're trying to date me, Larry.
Hey, listen. Go ahead.
I started publishing the letter in the mid-'90s. And speaking of Timer Digest, I got an email from them last night that they are going to suspend publication. Some business issues going there. So I think, Mark Hulbert with his Financial Digest for many years, yes. He tracked newsletter writers, folks like you and me, and of course Jim Schmidt, and later his son with Timer Digest. But sadly, they're going away too.
Wow, man, that is really. That's really something, I'll tell you. Well, an old story I remember. Well, let's talk about it because you're so kind to come on here. I'm looking at your second chart here on the SPX, and you've got your dates have been absolutely amazing, Stan. I mean, we get comments about it all the time here at TFNN and Tiger Den about how accurate your dates are. You want to tell us what you're looking at here, starting out in 2021?
Absolutely, and if you could scroll down the page just a little bit to center more on the S&P 500 chart. Larry, I found that the dominant intermediate cycle in the stock market tends to fluctuate about 34 weeks. And sometimes it's less, sometimes it's more. But I've done a very detailed statistical analysis of that data series, computed a histogram, looked at the frequency distribution. And it tends to, the nominal length is pretty close to 34 weeks. That's about 163 trading days, or about 7.3 months. And that cycles an accordion, it expands and contracts, but that's where the bulk of the data series falls. Now, within that intermediate cycle, there tend to be what I call 4 trading cycles. And that's fairly, sometimes there's 3, sometimes there's 5, but the vast majority of those intermediate cycles contain 4 distinct trading cycles. And those things can vary from 20 trading days to 50 to 60 trading days. But over the long haul, the nominal length of those trading cycles clusters around the number 40. So generally speaking, 40 trading days plus or minus is where the bulk of those cycles tend to fall. And if you could scroll a little bit lower on the page, on the S&P 500 chart, what I've done with the most recent intermediate cycle, which began from the March 23rd low and then terminated at the October 30th low of 2020. That time period actually spanned 155 trading days, very close to the average of 163. And one can see 4 distinct trading cycles within that. Once a primary cycle bottoms and a new one begins, then the whole sequence of counting trading cycles begins again. So we are right now in the first trading cycle off the October 30th bottom. And as I said a minute ago, the average of these from bottom to bottom is about 40 trading days. Well, right now we are 44 trading days off that bottom. So we are past the nominal point where a bottom should be occurring. Of course, it has not yet occurred. So I think what happened yesterday, we opened higher and immediately plunged lower. I think yesterday morning was probably the orthodox trading cycle high. And I think we're going to trend south here. How far down and for how long? Well, I tend to look for, if a low doesn't occur around the number 40, then I look to the number 55 to 58, right in there. Those are Fibonacci relationships, as you and I both know. And that's where I would expect the current trading cycle to bottom out. And so what does that equate to on the calendar? Well, if we had 55 to 58 trading days to last October 30th, that says somewhere between, say, January 21, January 25, about 2.5 weeks from now, we should hit a low point. And that's what the bulk of the work suggests to me.
Okay. Now, we have a question for one of our listeners, and that is, when you get to that trading date, do you go back and test to see whether it's setting at Fibonacci support or resistance? In other words, from the low that we made in September, where you check to see if that low is a Fibonacci retracement from the high we made here on January 4th, to say it's setting at a 382 retracement or something? Would that give you further confirmation that, yes, it's a bottom?
That's a good question, and I know a lot of traders do that. I don't find a great deal of utility in that. I find that Fibonacci and the derivatives of Fibonacci numbers work very well in terms of timing, i.e. what goes on the x-axis. On the y-axis, Fibonacci is kind of, sometimes it works, sometimes it doesn't. Yeah, when those retracements work, it's great. But more often than not, I don't find Fibonacci ratios to be all that useful consistently on what happens on the y-axis.
Okay, now a lot of questions coming in today. You've mentioned Lucas numbers several times on our show here. And when do you bring in the Lucas number along with the Fibonacci numbers?
I use Lucas numbers all the time.
We got
in conjunction.
Stan, we have to pay a few bills here. Stay with us. We got to pay a few bills. Stan Harley, the Harley Stock Market Letter. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Stan Harley of the Harley Market Letter. Stan, the question that I have from my perspective is, do you look at any of the foreign markets like the Nikkei, the FTSE, or the DAX, or any of those major foreign stock markets, even the Chinese markets?
I do look at the foreign markets. In particular, I track an index called the ACWX. It's the All-Country World Index, which tracks all of the major capitalist countries outside the U.S. That index, by the way, on December 31st, made a new all-time high. The European markets, interestingly, have been laggards compared to the rest of the world. The DAX just made a token new high just a couple days ago, but the French market, the UK FTSE, did not. In fact, the FTSE topped out 2 years ago, which was very troubling.
Stan, repeat that index that you use, please. All World Index, you said? Absolutely.
It's called the ACWX. It's the All Country World Index, and that tracks all of the world stock markets outside the U.S. It's a composite of every single one, and I think investors would be prudent to track that index if they want to get a sense of what's going on in the rest of the world.
Okay, Stan, I'm going to ask one more question from one of our listeners, then I'll let you go. And that is, what advice would you give the folks? Do you think that we've made a major top here in the stock market, or is this just going to be another correction that's going to be a buying opportunity?
The latter. I do not think we've made a major top, although we did see a high yesterday morning. There were no technical divergences to speak of. Everything was pretty much making new all-time highs. The advanced decline line, all the technical underpinnings are there for a continued bull market. But I think we're going to see some corrective action into the latter part of this month.
Oh, good. Very good. Listen, Stan, I want to thank you for coming on. We'll have you on in a few weeks if time permits. And I want to wish you and your wife the very best. And I know you're happy as a pig and rolling around in garbage, so I'm really happy for you, buddy. And, do you like living back in the East? Is it working out okay?
Yeah, it's great. It's a new experience being back East after 35 years on the West Coast.
Yeah, living in Westlake Village and Thousand Oaks all those years. Hey, listen, my friend, Happy New Year to you, and may God bless.
Same to you. Thank you, Larry.
Okay. Boys and girls, we have what we call a technical situation here in Tucson. I have lost all of my data, and I've lost my Ensign software, and I don't know what's happened. Everything else is working, but I am going to have to take a break here for 5 minutes and reboot this puppy, because if it doesn't come up, I have to figure out plan 2, and I don't have to figure out plan 2 very often. Thank you, Marshall. I'm going to reboot. I've got a few minutes here, and we'll get this besting here. David White has just posted this thing here, but I'll be back after the break, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, folks. This is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins, too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I believe we have Mr. Z on the line. Mr. Z, are you there?
I am, sir. Thanks for taking the call, and thanks for having Stan Harley on. Stan Harley on just now.
Always nice having him on for sure. What's up, buddy?
Real quick question, real-time analysis, if you will, please, on March coffee futures. I'm wondering
March
if you can pull up
coffee
an hourly
futures.
chart
Okay.
if your system is up.
I can get it if you'll just bear with me for a second here. Coffee is, you want to do the daily? I think we're trading around 126 or something like that. Uh-oh, what's happened now? What's happened? You know, Mr. Z, I'm having, I got it. Just bear with me here a second, buddy. And we're trading around 124 right now.
Exactly, and I'm wondering, in the past 10, 15 days, is that rally into the high Monday's open, is that a butterfly to a top pattern according to the Pesavento patterns? That's my questions. I'll thank you and listen offline.
Okay. No, John, it is not. Basically, what you have here, I posted a chart of the March coffee, and you'll see the resistance. This is right from the newsletter that we send out on Sunday night. It basically shows the resistance there at 128 in the coffee. We hit it 1, 2, 3 times. That tells you it's very strong resistance. On a very, very short-term hourly chart going back the last 10 days, that is a butterfly pattern. Looking really close at it. Well, yeah, if you say something like that, you're going to have to follow through, Larry. So follow through for a second, and I'll show you what I'm talking about here. We'll just get this up here so you'll be able to see it. This will be an hourly chart, and it's right up at the 78% level. That would be a butterfly pattern. But the important thing is, more than anything else, is that it's setting right there at the 78% level at the 128 level. Now, we've come down from 129 down to 123, but we need to get below 121 in order for this to facilitate a more of a correction. So 121 is that key level. Yes, you are correct. It is an ABCD up there right at the 78% level. And that's why when you're looking at these numbers really closely, you want to be able to come in and see that you're setting right at these spots that look really interesting. The most amazing thing to me right now is I just noticed that we moved $1 a barrel in crude oil. So it's very important, folks, that we don't get above 51 in the February crude oil, because if we do, that would tell us that it's breaking above the 61% retracement on the weekly, and that would not be a bearish phenomenon in any stretch of the imagination. So that's what we're watching in coffee. I hope that helped, Mr. Z. But it's that's what it's looking like right now. We have a little more of a correction. Should be a great deal of support at the 114 level, even if we get a sell-off, because that'll be the 382 of the last move. But right now it is facing the daunting task of getting above that 78% level at 128 in the coffee, and that was an easy one to see. I don't trade coffee. I know a lot of the folks do. I actually should, because it's different now. The coffee pit is no longer in. It's no longer there. It's all electronic. But back in the days when we had the New York markets, they were, it was very, very corrupt. It was all relatives, and they had. Well, I don't want to get into I don't want to say things that I don't want to talk about, so I'm not going to say anything more. We have another question from North Carolina. Johnny, are you there?
Yes, sir, Larry. How are you doing today?
I am very good, thank you. What can I help you with?
My question is about UNG natural gas.
Okay.
What your analysis is on that?
Yes, sir. I think we're going higher, but boy, it's a wild son of a gun. When you drop 20 handles overnight, that happened a week ago, and then you stay there for 2 days, and then you go up that much. That market is it's acting like pork bellies used to. So, I was very bullish when it was down there at that 255 level. We rallied up to 288, and the next thing you know, you're down there around 230. So it's really crazy. But I do believe we're working higher in natural gas. I really believe that.
Okay, very good. I appreciate that, Larry.
Where do you live in North Carolina?
Pinehurst area.
Oh, boy, is that nice. Wow, that's a beautiful area. Yeah, I love North Carolina. John Hill is down there in Hendersonville, and I've been there many times, and it's it's really great. And Ed Dobson still lives there, too, so it's a really beautiful part of the world. Hey, thanks for calling in, John. I really appreciate it, and Happy New Year to you and your family.
Thank you. Same to you, Larry. Have a good day.
You bet. Okay, folks, let's take a quick look here at the old crude oil. We'll get this up on a daily basis. And boy, we have had a nice move here. We haven't made that top yet. I was sure we were going to, but as I say in the trade, many times I'm wrong. The number you got to watch, folks, is if we get above the 50. I believe it's 50-40 is the exact number that we're looking at, is the the 61% retracement on the weekly. So let's take a quick look at that one if we get there. So that's going to be very, very interesting to keep a close eye on that one. So we're going to wind up the show. So live every day in an attitude of gratitude, and may God bless. And we'll see folks on the flip side tomorrow. Tomorrow we're going to have Rich Anderson as our guest. So let's make sure that we have a good evening tonight, and try to help folks that are way out of out of reality as far as having any help at all. You really got to help some folks because it's really tough out there. Even in Tucson, it's tough. So we'll talk to you folks later. I'll try to get my data fixed here. It's still giving me trouble, but may God bless.